Hello everyone and welcome to the Cyclical Investors Club YouTube channel. I'm back after a little break and vacation. Today we're going to be looking at Skyworks Solutions. This one came in by request down in the comment section of one of my other videos. If you have a request of a stock you'd like me to analyze on the channel, just put it down in the comments. I will get the ticker on the whiteboard behind me and eventually I'll make a video. If it's a stock that's in the S&P 500, like Skyworks, I put those on YouTube for free. The rest I put over on Patreon at the $5 tier, $5 a month tier level. Those links are down in the description. And if you join Patreon, you can also get a big discount if you ever decide to join the full Cyclical Investors Club service over on Seeking Alpha. And I also have a 25% off discount link for fast graphs, which you'll see me use here in this video down in the description. As always, this is not individual investing advice. This is just how I analyze stocks. Okay, so Skyworks. So I don't actually actively track Skyworks because traditionally their stock price and earnings have been a little unpredictable, or the stock price doesn't always track earnings. So if we go back like 20 years, I'll just randomly pick here, and you can see that they've done pretty good. I mean, like 15% growth rate overall during this time has been really great. I think a lot of that had to do with the adoption of mobile phone, like smartphones. So, and then just general internet expansion and high-speed internet expansion. So, but the methods that I use have never been particularly good at like predicting like what Skyworks stock is going to do. As you can see, the stock price fluctuates a lot. Earnings don't necessarily follow it. More recently, we have the COVID kind of stimulus boom in 2021 and 2022, and now they've had the bust that came afterwards. So I kind of think of this as almost like an Apple, like a play on Apple, kind of what Apple's doing, mobile's doing, can benefit Skyworks. And I think there is, let me see real quick if I pulled this back far enough. So they had this giant year in kind of halfway through 2015. So since then, much like Apple's revenue, honestly, with the exception of the COVID boom, there really hasn't been any earnings growth for Skyworks. So, I mean, let's shorten the fast graph to this year. And let's just look at kind of the time frame that we have here now, right? So everybody got smartphones by like 2016, basically. And since then, we just replaced kind of the ones that we have that we're not using. So the earnings growth rate during this time was only 2.15%. Like, less than the rate of inflation. We did have a couple good years where there was stimulus money and everybody went out and spent money on technology, which obviously benefited Skyworks. But there really isn't like much growth here. So when you look at a valuation at 17 PE, I mean, that's kind of expensive if earnings are only expected to grow 4% next year. All that said, I do think that a trader, like a kind of medium-ish term trader, could trade the stock and buy it when it's down about like 35% and then try to make so if you buy it when it's down like 35% and it recovers, you can make like 50%. And it does seem to go through these pretty steady cycles. Apple kind of did that for a while too until the market kind of caught on. So yeah, if we just go back this 1 year, we see another time we have a more than 35% decline. Could buy it, make 50%, buy it, sell it after another 35% decline, buy it, sell it. So, you could make money, I think, trading it that way. And that's kind of, I'm just excluding this little anomaly here with the pandemic. I think that was just a little too big. Like, probably the stock won't recover that high again unless it has some other big catalyst that comes along. So I think a person could trade this probably relatively safely. I mean, it's not, now things can always change, but things have been pretty stable for them for the past like 10 years. So if you wanted to trade something and try to get like 50% return every couple of years when the market gets a little bit too down on it. So, from here to there, even, you got your 50% return right there. I think those are definitely possible. That's not really what I do. I usually aim for cycles that are bigger than this, that are more like, if it's a cyclical, buy it when it's 50% off its highs and make it double. That's more what I aim for. I don't really kind of trade as much, although it is kind of tempting with Skyworks, I have to say, just because it doesn't seem like super risky. But so that's how I would approach it. You would have had another opportunity here. Again, you could have bought when it was 35% down, made 50%. There's been 1, 2, 3, at least 3 opportunities in the past decade to earn a 50% return pretty easily. You're just buying it. That, again, you have to treat this as a super cycle high, so you would have had to wait for this deeper drawdown to buy and kind of be cognizant of that. But so yeah, it's not one that I would get like super excited about. Let's say if you bought it at an average, well, let's find an average PE. Let's like a 15 PE in 2017. You held through today, you're getting a 5% annual return. It's not anything special, but it's also not like super duper risky, like maybe it doesn't appear to be anyway, like some other stocks could be. And so yeah, that's my thoughts, I guess, basically on it. There's not really too much math to do because it's hard to know exactly kind of how the market's going to treat these earnings. A lot of times the market's forward looking and it doesn't necessarily follow the earnings exactly like some other more stable businesses. So it's a little wonky, but a person could probably trade it at this point on those short-term trades if they want to. And that's probably how I would approach. My approach is just to kind of ignore it. But I mean, if somebody really wanted to trade it, they could trade it that way, and without taking on probably like excessive risk. So that's how I think about Skyworks. Hopefully that helped kind of frame things a little bit, at least get some perspective on it. That's a little different than probably what anybody else is going to do, who's going to try to get in and crunch the numbers and look at the future and see what their opportunities. A person can do that. I find people are rarely accurate. So I try not to do it and just admit, I don't really know what's going to happen. But if we look at the last decade and assume it's similar, then a lot of times it is, if you don't see anything obvious that's like not going to be similar. So really what I like to do is go say, okay, what is there something really different now that we can obviously see? And if there is, then make adjustments, right? But if there's not, then you can usually assume that patterns that have happened recently over the past 10 years or so are probably going to happen again. And sometimes you can make a little bit of money that way. But in general, it doesn't really have enough growth anymore to interest me as like a growth stock or a longer term investment. All right, thanks for watching. If you have any requests, put them down in the comments section. If you found this useful in any way, hit the subscribe button and the like button. I'll see everybody later. Bye.